Hi everyone. Welcome to Purple Roof's mortgage training session. Today, we'll explore the different property types in the UAE and how financing works for each. Let's talk about freehold properties. In simple words, a freehold property means full ownership. When someone buys a freehold property, they fully own it, whether it's a house, an office, or just a piece of land. These types of properties are only available in special areas in the UAE, which are called freehold zones. These zones are approved by the government, and only in those areas can people buy property with full rights. Freehold properties can be residential, commercial, or land. That means you can own a home, a shop, or even a plot. When you own a freehold property, you have complete control. You can sell it, rent it out, give it to your family, or keep it for life. The ownership is not limited by time. However, the rules for freehold ownership can change from one emirate to another. For example, Dubai may have different rules compared to Sharjah or Abu Dhabi. So, before making any deal, it's important to check the local rules of that emirate. Now let's talk about non-freehold or leasehold properties. These are also residential, commercial, or land units found across the UAE, but the ownership is limited. In most cases, only UAE nationals or GCC citizens are allowed to buy these properties. However, expatriates may still be able to purchase them, but not with full ownership. Instead, they can get long-term lease rights, usually for 10, 30, or even 99 years. These special approvals are given by the relevant government authorities, and the whole process is handled through the land department. It's important to understand that leasehold means the buyer is not the full owner of the property, but they have the legal right to use it for a set period of time. Now, let's move to the third category: special zones. Some areas in the UAE don't follow the usual property rules. These are called special zones, and they are handled differently from regular freehold or leasehold areas. Examples of these zones include Dubai International Financial Center, Jebel Ali Free Zone Authority, International Media Production Zone, Dubai Investments Park. Each of these zones has its own set of rules and procedures, especially when it comes to property financing and legal documentation. For example, some may use Ijara-based Islamic financing, and others may require special steps for mortgage registration, also called collateral perfection. So, whenever you're dealing with a property in a special zone, make sure to check the zone-specific guidelines or memos. These zones don't follow the standard process and need extra care and understanding. Let's now talk about ready properties. A ready property means that the construction is complete and the unit is ready to live in or use right away. It can be either residential or commercial. But not every finished-looking building is officially ready. It must meet certain conditions set by the local municipal authority of the emirate. Here's what makes a property officially ready. The construction should be at least 90% complete. Utilities like DUA, SUA, or FUA must be working, and this is confirmed in the evaluation report. The developer must provide a completion certificate and a handover letter. Once these documents and conditions are met, the property is considered ready. These ready properties can be financed through Islamic financing or conventional loans. Both are allowed. Also, if a non-freehold property meets all these requirements, it will also be treated as a ready property and will follow the standard process for mortgage registration and disbursement. Now, let's move on to under-construction properties. These are properties that are still being built. Construction has started, but the unit is not yet ready for move-in. Financing is possible, but only when the project is officially registered and approved by a licensed developer or contractor. There are two main types of under-construction properties. 1. Under construction, non-freehold, leasehold. These projects are located in non-freehold zones and are managed by registered contractors. Financing for these depends on whether the project meets all legal and regulatory requirements. So, before any financing is approved, everything from the developer's registration to the project's compliance must be checked carefully. 2. Under construction, freehold. These are being built in approved freehold areas, and the developer must also be officially registered. In this case, buyers may get direct financing from the developer during the initial sale. But if the buyer wants to resell the unit before it's complete, that needs a special approval memo and a different process. Whether the property is in a freehold or leasehold zone, both Islamic finance options like forward ijara and conventional loans can be offered depending on the project stage and agreement terms. Now, let's discuss the government housing programs. These are designed specifically for UAE nationals. These programs are launched by the government in each emirate to support Emirati citizens. The goal is to help them own homes by offering affordable housing solutions, especially for families with limited income or financial challenges. In many cases, the government doesn't just offer guidance, it provides financial grants, interest-free loans, or subsidized housing units. Some programs also allow additional financing if the cost of the home is higher than the grant. Let's look at some of the main housing programs available. Mohammed bin Rashid Housing Establishment, Dubai. This program helps Dubai nationals by offering housing loans, ready-built homes, and land plots. Sheikh Zayed Housing Program, Federal, across multiple emirates. This is one of the most well-known programs. It offers housing grants, construction loans, or ready-built villas to eligible UAE nationals. Sharjah Housing Program, Sharjah. Focused on assisting Sharjah-based citizens through funding, loans, and land for building homes. National Housing Program, Abu Dhabi and others. A broader housing initiative that may include land allocation, construction loans, and pre-built units. Other emirates also have their own housing initiatives, each with different criteria, depending on the emirate's policies. Now, let's understand the financing part. These programs can offer support in two ways. Islamic finance structures such as Murabaha, where the property is bought by the bank and sold to the customer at a profit. Ijara, a leasing structure where the customer pays rent for living in the property until ownership is transferred. Conventional loans, where the buyer receives money upfront and repays it with interest over time. The applicant can usually choose the financing method depending on eligibility, preferences, and the rules of the program. Always remember, when dealing with government programs, make sure you understand the specific terms, eligibility rules, and documentation needed, as they can vary across emirates. Thanks for watching. See you in the next video. Keep learning with Purple Roof.